And also today met up with representatives from the banking sector, big banks as well as the NBFCs. So Prakash is here to tell us what they discussed.
A pre-budget meeting with the representatives of the financial services and the capital market has concluded, and some prominent names who attended the meeting are Nilesha, PMESC part-time member and the MD Kotak Mahindra AMC, George Alexander, MD Muthoot Finance, Prem Prabhakar, MD and CEO SBI Cap, Atul Kumar Goyal, ex-chairman IBA and MD PNB, and Arun Kohli, India head Morgan Stanley, among others. We spoke to some representatives after the meeting, and we are getting a broader sense that they have suggested Ministry of Finance to continue with the fiscal discipline path along with the inflation targeting. Along with that, the Finance Ministry was also suggested by these representatives to give a special focus to the policy stability along with the transparency in the taxation structure. These representatives have also acknowledged the fact that India has done well amid an extremely volatile world, and all possible steps should be taken to keep up the growth momentum. Along with that, some specific proposals, the recommendations have also been made by the representatives of the NBFCs in order to increase funding for the NBFC sector. It was suggested that SIDBI should be allocated funds to fund NBFCs. Along with that, the process should be initiated to bring down reliance on bank funding. Along with that, some anomalies related to recovery process and exemption in 10% TDS clause should also be corrected. So these are the broader recommendations. Along with that, we also given to understand that issues related to taxation structure in the capital market were also raised. Let's see how it pans out and which are those recommendations going to be accepted by the Finance Ministry. That is something which is very interesting, which is going to be very interesting to see.
All right, Prakash, thank you so much for those details. But the all-important pre-budget meeting with the financial sector has concluded, and some key voices have also spoken on the suggestions and recommendations that were made. And Italy now managed to speak with some of those experts. Let's go across and listen in.
As an industry body for NBFCs, Finance Industry Development Council, we are also going to apply for SRO with RBI now. So what we've suggested is that, recent data and figures have shown that NBFC's credit to GDP has increased to 12.5%. Our lending to MSMEs has grown 3 times more than that of banks. So the sector has grown. On the other hand, there is a concern voiced by RBI that the NBFCs are over-dependent on banks. So they have increased the risk weight also. Fine, that's fine. So as a result, bank funding is coming down. But then what is the alternative? So we've suggested that now if government can do some specific allocation of funds to SIDBI, which can then refinance NBFCs, because SIDBI is anyway funding NBFCs today out of their own funds. So if government can allocate some more funds specifically, then NBFCs will get funding and reliance on bank funding will also go down. Secondly, we said that RBI has harmonized the regulatory framework for NBFCs.
If you like this video, then like, share and subscribe to ET Now.